from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Caroline Hyde, in for Emily Chang. This is Bloomberg Technology. And coming up in the next hour, the House has passed President Biden's Build Back Better bill. It now heads to the Senate, where its fate is pretty much less clear. We discuss the latest in Washington. Plus, crypto exchange GEMINI Trust says it's raised $400 million in a round of funding that values the company at a cool $7.1 billion. Details on the Winklevoss-led firm and a look at Bitcoin's volatile week. And in a time when real-world real estate is uncertain, virtual reality property sales, well, they're surging and bringing in millions of real-life dollars. We'll have the latest on the meta economy. We'll get to this in a moment, but first, let's get a look at the market. Stocks retreated after, well, some hawkish remarks from the Fed officials, but most notably, some mounting concern about another wave of the pandemic in Europe that could spur more lockdowns. Bloomberg's Kriti Gupta, you paint a picture where people wanted tech.
Right, absolutely. Taking outperforming. It's a risk-off day, whether you pin it on what the Fed is saying, whether inflation is transitory, whether those supply chain concerns are still piling up, or bonus, whether you start to see those COVID lockdowns that you're seeing in Europe start to spill over here into the United States. Pick your reason, Caroline, but essentially the big tone of today was risk-off. And you really saw this here with a little bit of a bid in treasuries, yields going down about 3 basis points. You even saw, like I said, tech outperforming, and even crypto was up 2.2%. Usually we use that as a risk sentiment gauge, but not today. And I'll explain a little bit later in the show why, but let's get to the story here, which is semiconductors in particular. Semis and EV right now, as you see that EV boom, you see them needing more and more semiconductors, and therefore the stock rising more and more. And on that EV news, I just want to hit some news that we've gotten after hours. Ford and Rivian scrapping their partnership. A Ford spokesperson saying that Rivian has made great strides in the EV space, so has Ford, and they're choosing to move ahead independently. But I want to stick with that semi story in particular, because that really was the story of the week, a tale of two chip makers. We know there's been this global chip shortage. We know that there have been supply constraints, and that's really been the story for Applied Materials and ASML, which is essentially the Dutch semis chip maker, essentially making the equipment you need to make the parts for things like iPhones, things like cars, things like computers, actually down today because they're extra exposed to those supply chain concerns. On the upside, though, you have NVIDIA, which was up for a second day, starting to get near that $1 trillion market cap. It's all about diversification for that company. And I'll end with our very top stock, our top performer in the semis index, actually driving the NASDAQ higher, which is, of course, Micron. The CEO speaking at the Bloomberg New Economy Forum saying that chip shortage, well, it's still there, but it's easing. It's getting just a little bit easier, Caroline.
Indeed, Kriti, we hope in some parts of the economy, and indeed still front and center for government is the supply chain issue, but also front and center for House Speaker Nancy Pelosi, indeed, has been uniting a fractious Democrat Party to pass President Joe Biden's tax and spending bill in the House this morning. Now, the legislation is headed to the Senate, where the fate remains pretty uncertain. Bloomberg Chief Washington correspondent Anne-Marie Horden is standing by in the White House. And, I mean, Anne-Marie, overall, we're seeing just one Democrat vote against the bill in the House, but the Senate is going to be very different.
Yeah, it is, because you have to get every single Democratic senator to sign up and vote yes on this bill. So today was a really big hurdle to clear for the party. But now when it goes to the Senate, it's going to be even harder to make sure they can control everyone on board with the same policies. And the issues already, Caroline, that we are seeing is that there are provisions in the House bill that already we see the Senate want to change. You take the instance for SALT, those deductions, potentially the provision, the policy may change. What we're hearing from Senator Bernie Sanders and Senator Bob Menendez, how they want to potentially edit that policy. Also, something that's really important to pay attention to is paid family leave. Senator Manchin has said time and time again he doesn't think this is the appropriate way to address it. So it's going to be a very difficult process. And not only that, Senator Schumer wants to get this done before Christmas. That is a very tight deadline, given the fact that just this upcoming week, senators will not be here, of course, for their Thanksgiving recess.
No, indeed. And I think what's really the dividing point here? Is it the content? Is it the inflationary pressure? Is it the fact that, you know, there's still so much discord between, you know, certain parts of the United States where, well, we once again look to Joe Manchin to decide the fate of one particular bill?
Well, it's really hard to put a finger on what could be the one thing, because as I said, any single senator could have an issue with a provision and block that vote. So for Senator Kyrsten Sinema, during this whole process over the past couple of months, her issue is with some corporate taxes. Senator Joe Manchin, his issue was given some climate provisions. Potentially, Senator Bernie Sanders, it's going to be SALT. Depending how they are able to get to a consensus, this is why it is so difficult in the Senate. And it is because the Democratic Party has a majority, but Caroline, it is razor thin. They need every single vote. So anyone at any moment could act like Senator Joe Manchin, what some people sometimes call President Manchin. And the president has said this. He said, when you have a Senate that has 50 Democrats, everyone is president.
Nothing like a little bit of tension to ramp into the holidays. Anne-Marie Holden is going to be busy in Washington. We thank you. Let's turn our attention now to some of the key headlines within the world of technology. Bitcoin, we've got to talk it, retreating almost 20% in less than 2 weeks. Yet again, proving, look, this is a volatile asset if you hadn't already realized. Let's bring in Stacey Marie Ishmael, which is, of course, Bloomberg News crypto managing editor. And I'm interested, Stacey Marie, in the overall volatility here. And it's to be expected. I mean, we're up, what, 40% since October?
At least. Yeah, we hit an all-time high of nearly 69,000 just a couple of weeks ago. So, I do think that what is fascinating to me about crypto as an asset class is if the Dow was down 20% in 2 weeks, people would be losing their minds. But, Bitcoin aficionados are like, yeah, this seems fine. Don't worry about it. There's nothing fundamental that's happening here. And, really what they're looking for is there's a support level below sort of 54,000. And if it goes below 50,000 is when we're hearing that folks in the market say they'll start to worry.
Technicals at play here, and you hear many a reason. Is tax, like sort of the fact that people have profited so much, people are going to be selling down, they are going to be locking in some of the tax provisions? Is it that, I mean, people have cited Mt. Gox, people have cited many, or are they just plucking at straws because at the end of the day, this is just a volatile asset class?
I think both of those things can be true at once. I definitely think that the fact that the tax provisions have made it into, certain of the Biden administration proposals, the fact that we are reaching sort of end of year and folks are trying to take profits after what has been a pretty breathtaking run. And some folks are also just like sorting out their portfolios going before they get into January. But I think the Mt. Gox thing, which is that they've reached a settlement. For folks who've been following Bitcoin for a long time, this is one of the very earliest exchanges. They reached a settlement, which means that some people that got Bitcoin decided to exit. They're like, that was too much risk for me, I'm out. But what we're really going to continue to look at is the overall sentiment across a basket of currencies, right? So I think Bitcoin does get a lot of attention, but we're going to keep an eye on some of the other coins to see whether this is a token-specific sell-off or if there's something else happening here.
And it's important to look at the rest of the crypto sphere because there are exchanges where you can trade not just Bitcoin, Ethereum, Solana and the like, and their own valuations are becoming higher. And what's interesting is they're not raising money through ICOs anymore. They're raising money through private equity, through VC money. And talk to us about some of the exchanges that hit pretty lofty valuations this week.
Sure. So GEMINI, which is famously owned by the Winklevi, raised $400 million in a valuation that has them at $7.1 billion right now. And they had some interesting participants, including Commonwealth Bank in Australia, which is like a very traditional type of thing. And Commonwealth is going to be partnering with the GEMINI on digital asset custodianship. We've certainly seen some other interesting raises recently. Celsius, you might recall, raised $400 million not too many months ago. A couple of things that we're looking at is what folks are going to be doing with this money. So for some of them, they've said we need to hire. Certainly, we've heard from some of them they're trying to hire in compliance and legal to kind of...
Because they are pretty compliant, GEMINI. They've always tried to...
GEMINI is very much... They've always positioned themselves as... we are making nice with the regulators, and that's been something that they have used as a selling point. By volume, they are significantly smaller than some of their other rivals. I think like their average daily volumes are, if it's about $200 million in spot compared to like Binance, which is in the tens of billions. But they have really focused on compliance. They may be looking to staff up, and what we're also seeing is some of these folks are trying to make acquisitions now. So the space is getting quite interesting quite quickly.
Could see some consolidation. Remind us, I mean, the Winklevi, They are billionaires in their own rights just by how much Bitcoin they each own. So,
Yes.
why did they need to outside money? Is it almost legitimization to a certain extent?
That's definitely one of the angles that we've heard described to us, and I think again going back to this bank in Australia, the types of partnerships that they are pursuing are what I would consider to be like mature and mainstream. To your point, like the ICO phase, it was an interesting time, but
Wild.
it was a wild time. But here we're talking about what white shoe in the parlance of Wall Street types of investors. And I think that also gives a degree of reassurance to folks who are looking at this asset class and trying to make a determination on if I am a fairly risk-averse or traditional investor, if I'm a pension fund in Australia, I'm not sure I want to hold Bitcoin, but are there other ways that I might be able to get exposure? So.
Through Square, perhaps, with their own white paper and doing more of a decentralized exchange. And can we even go there with Ken Griffin outbidding the Dow and the Constitution? Yeah. Now they got 50 million. What are they going to do with it?
What a wild time. Imagine going from a bunch of people on the internet being like, what if we owned a copy of the Constitution, to what if we had $50 million to try to buy a copy of the Constitution, to then being sideswiped by a billionaire at the last second who's like, no, you can't. This one's mine. What a fun week this is.
And the story keeps unraveling, because now they're trying to raise, 500 billion to be able to buy Citadel or something. The jokes they write themselves.
It's true.
Stacey Marie Ishmael, always a joy. Bloomberg News crypto managing editor. Happy weekend. Meanwhile, coming up, Intuit shares popping after better than expected quarterly earnings. We'll have Credit Karma CEO Ken Lin telling us about the role they played in the Intuit success story. We'll discuss that and so much more. This is Bloomberg. Intuit shares soaring after releasing quarterly earnings, beating estimates by far. Now, the global technology platform, remember, it makes TurboTax, QuickBooks, Mint, Credit Karma. If you're a small business, you know it. And it expects revenue growth of 18 to 20%, up from prior guidance of 15 to 16%. Let's talk about all of this with a key component to that success. Credit Karma founder and CEO Ken Lin, of course, that part of the business boasting a revenue of 418 million, calling a record for the business. And analysts really saying the strength of Intuit's numbers were based upon, in large part, you. Why are you making so much revenue at the moment in the world of, wanting my credit score?
Well, first, thanks for having us on. It really has a focus on solving consumer problems. So Credit Karma, from a history perspective, has been in the space for 13 years, helping consumers find and understand their credit scores. And I would say for the last 5 years, we've been very focused on a key important aspect of what that means. When most people are trying to understand their credit score, they're trying to understand what credit products they're qualified for. And we've been building a product called Lightbox, which solves a very important problem, which is most consumers get declined for the products that they apply for, the credit products that they apply for. And Lightbox solves that in a meaningful way. And I think that is what you're seeing in terms of the strength of the business, the strength of the engagement that we're seeing in our memberships, and the strength of the partnerships that we have with our financial services, industry partners.
Talk to us about the membership levels that you see and how you're continuing to win new clients.
Well, we have over 120 million members on our platform. And what that does is it gives us a lot of scale when we approach new financial services partners. So we started off helping our members find the right credit cards and then personal loans, which we call our core business. But over time, we've really expanded into other verticals, such as auto loans, home loans, auto insurance, and more recently, checking and savings products, all with an eye of helping consumers find the best product, but most importantly, saving money when they do find those products.
Ken, how linked to peaks and troughs of the economy are you, in the respect that when a consumer feels flush with cash, they want to start making bigger purchases, they want to be buying their autos, they want to be getting their mortgages. Does that bode well for your business? And then if there's a pullback, does it hurt?
Well, anytime the economy is in trouble, I think most companies feel it. But what I would note is that, consumers on average take out 1.1 new credit products each and every year. And our focus is when they are looking for those particular products, we're here to help them. We're here to help them find the very best product from a cost perspective. We're here to simplify the application process so they don't have all the friction necessary. And maybe most importantly, we're here to ensure that the products that they qualify for or apply for are ones that they qualify for. And that's what's most important for most consumers.
Remind us how you make your revenue and what side are you managing to make money? Is it from the partners that you have?
Well, that's a very important question. So what we do is we focus on being, a trusted advisor to our members, which is what we call them, 120 million of them today. And we make money when we help them connect the right financial services products. So we don't sell leads, we don't sell impressions. We get paid a success fee for the most part when our partners and when our members, more importantly, are able to find a financial product that helps them.
How do you, you must be incredibly focused and passionate about the world of financial literacy. And is that something that you think is being focused on enough at the moment? We sort of seem to have come off from our heady days of retail investors versus Ken Griffin. Now it's just Bitcoin and crypto and NFT investors versus Ken Griffin. But I'm interested in your perspective on how people are understanding what they can go out there, what they can spend on, and if this is a role for government in some way.
Well, I think the financial service industry has got tremendously complicated over the last 20 or 30 years. When you think about big data, when you think about machine learning, when you think about all the new innovations and technologies that banks are using to find the right customers, to underwrite the right customers, to create complicated products, there's simply no way that your typical consumer can really keep pace with all of that. And for us, what our insight is and what our platform is really focused on is solving those problems and creating parity so that all the big data that the banks are using, our members can also use with our technology, with our platform. So we're able to connect and understand, what Bank A is going to approve you or Bank B isn't going to approve you. And to your question about, is this something that the government needs to solve? I think absolutely, they need to step in some form. I mean, banks and products are just so complicated that there's just no way of keeping pace these days.
I'm interested in the rise of buy now, pay later. And interestingly, the CEO of INTUIT, Sasan, was saying, look, you're going to benefit. Credit Karma could benefit through that. How so?
Well, keep in mind, our focus is to make sure that our members are able to find the credit products that they need. And for us, we are agnostic to the actual type of product. So whether that's a credit card, a personal loan, an unsecured loan, our goal is to make sure whatever they're shopping for, they get the best price, that they get the transparency in the industry, and that we're able to make the process as easy as possible. So for our perspective, we keep an eye on the sector. And the other thing that we really focus on is we want to make sure that the products are good for them. And I think, one of the questions right now is buy now, pay later good for a consumer? And that's something that we're tracking very closely and, are investing both our time and our engineering resources against.
Credit Karma founder and CEO Ken Lin, great to have some time with you. Thank you for spending it this Friday. Meanwhile, coming up, more than half a dozen bipartisan attorney generals are coming together. Their goal, investigate Instagram's role in trying to lure young kids onto the platform. What they plan to do next. And as we head towards the break, let's take a quick look at the makers of COVID vaccines. Booster shots from Pfizer and Moderna received unanimous backing for use in all US adults from the public health advisors. It clears the way for millions now to go and get additional protection before the threat of a winter surge. This is Bloomberg. Now, a woman who works at Tesla's Fremont, California factory has filed a lawsuit against the EV maker, claiming that female employees face, quote, rampant sexual harassment. Tesla didn't immediately respond to a request for comment. The case comes as the company is already facing a staggering $137 million verdict in favor of another worker who said he experienced pervasive racism at the same factory. Meanwhile, the top lawyers in more than half a dozen states around the US are joining together to investigate Instagram and its impact on kids and teens. For more on all of this, Bloomberg's Naomi Nix joins us for more. And just remind us what the AGs are setting out here to do, what they feel that can be achieved in their investigation.
So the state attorneys general essentially said, that they're looking into how the company has been handling young users on its platforms. This, of course, comes after a series of articles based on documents surfaced by former Facebook product manager turned whistleblower Frances Haugen about the effect that Instagram has on young girls and their mental health and their self-esteem. And so the state AG is saying, look, we're going to look into this. We're going to look into, whether Meta has been totally upfront about the effect of its platform on these vulnerable users.
Is this significant? How significant is it? Because for Meta, the list of investigations is relatively long already.
Yeah, I mean, I think it's just another point of scrutiny for the company and another topic that state AGs are looking into. Look, they had, months ago, they had urged Facebook to abandon its plans to create Instagram Kids. It was going to be a sort of version of Instagram for young people under the age of 13. They said, look, they had serious concerns about privacy. They had serious concerns about the impact, on kids that this product would have. And so they had urged Facebook to announce that they would be abandoning that project. And Facebook eventually did that. But they hadn't gone as far as to initiate a probe. And so this is a significant action.
Of course, the New York Attorney General, Letitia James, she's been saying that, our coalition will not hesitate to take whatever action is necessary. What action could they take, would they take?
They could file a lawsuit, essentially alleging some sort of harm or violation of Meta's terms of service. It adds to the state AGs are already investigating Facebook around potential antitrust issues and the way that it has been seeking to acquire rivals. And so this, again, adds another point of scrutiny on the platform and just adds another issue that those regulators are looking into at the state level.
We want to thank you so much, Naomi Nix, bringing us all the latest when it comes to those attorneys general and how they're looking at Meta. Meanwhile, coming up, another volatile week for Bitcoin. We've been discussing it. And with the industry facing more regulation, some are arguing, look, that the crypto sector should actually be allowed to regulate itself. We're taking a long, hard look at, the valuation of digital assets overall and, of course, in the metaverse, too. This is Bloomberg.
What looks like a very interesting and somewhat exotic effort to literally mine new coins in order to trade with them has the potential for undermining currencies, for undermining the role of the dollar as the reserve currency, for destabilizing nations.
I think any financial institution, any bank, to be honest, any person should be looking at crypto. If you learn about it, understand it, and still don't like it, that's okay. But not learning it is irresponsible.
You can say that we are now working very much on a trade platform. It is very much in addressing customer needs, right? But in a safe manner. We want to help them to recognize the investment and how to handle it.
This is Bloomberg Technology. I'm Caroline Hyde in New York. And you were just listening to the latest from the Bloomberg New Economy Forum this week in Singapore, where world leaders weighed in on the future of crypto. For more on the recent crypto moves, let's turn our attention to Kriti Gupta. You got it all.
Well, Caroline, let's just talk about what crypto did today, because it was a risk-off session in the markets, but that didn't necessarily show up in what we like to look at as a risk sentiment gauge. And of course, you saw the Bloomberg Galaxy Crypto Index up 2.2%, but it wasn't Bitcoin that was driving those gains. It was Ethereum, and that's why I say it kind of diverged from the broader sentiment in the market. And here's what I mean, why Bitcoin is really the story, because if you zoom out the chart and actually look at how Bitcoin has been performing lately, especially in the conversation of inflation in particular. So this is going to be a chart of Bitcoin and the orange line and the white line here being those 5-year break-evens, essentially measuring those inflation expectations. You can see they move together fairly closely. This idea here that Bitcoin could potentially be that inflation hedge, especially on the thought that you just heard, essentially, where some of the biggest world leaders are saying, well, this could actually be the key to undermining some of the major currencies, which of course we know is also affected by inflation. Let's get to how you play this though outside of the crypto world, and that is of course the stock market, specifically through ETFs, which not too long ago made their debut. The Bitcoin futures ETF I want to look at is BITO, and you can see that since its debut, it's only had 1 day of outflows. So you're not seeing necessarily an acceleration into these funds, but you're not seeing money come out of it either. So that's going to be a relationship we want to keep our eye on, Caroline.
We certainly do. Keep an eye on the volatility. Let's dig a little bit deeper into the world of crypto, into the world of Bitcoin that has, of course, just been losing some of its value, 20% in less than 2 weeks, as we understand. Yet again, proving that there's extreme volatility within crypto investment. Some analysts saying this is expected, of course, after a 40% rise in October, but China's crypto crackdown, new US tax reporting provisions, not to mention Mt. Gox and the like, perhaps, keeping investors a little bit on their toes and taking profits. Janine Yorio is with us, co-founder of Republic Realm. It's an active investor in and a developer of metaverse real estate ecosystem. She joins us for our weekly cryptocurrency segment. And Janine, first and foremost, I want to dig into the world of art, of NFTs, of digital assets with you in the metaverse. But when you're looking at the volatility of Bitcoin and many still saying, look, we need to have a slightly less volatile environment if you're going to draw in institutional investment. Is that something that you're looking for, hoping for, or does it not need institutional investment at all?
Well, I think if we are trying to remove volatility from crypto, we're doing crypto a disservice because the thing people actually love about it is the volatility. And the sooner we admit that, I think the happier we'll all be. It's addictive in that it's so volatile and these crazy swings are not abnormal for crypto. I think that despite that fact, I'm already seeing lots of traditional capital waking up to the metaverse opportunity broadly, crypto specifically, and we're seeing more and more what I would consider to be slow-moving capital, pension funds, pension fund advisors, really trying to get smart on the category, which leads me to believe that in the next 12 to 18 months, we're going to see a pretty dynamic shift in asset allocation models where even the slowest moving and most traditional and risk-averse capital players and allocators are going to look to allocate to crypto and specifically to metaverse. It's just too big of a category to ignore, and it's irresponsible not to look at it because their LPs will require it.
Exactly, and I think there's an element that, for want of a better phrase, the gateway drug has been Bitcoin, and then you start looking at the other alternative coins that are out there. But there's also more traditional ways of getting exposure. You're looking at Square with its new white paper, looking at decentralized exchange. You have, of course, Metaverse, the rebrand of Facebook, if people want to play the Metaverse sphere. Even Nike looking to get into that space with Roblox. I'm interested in what you think some of the most interesting plays on Metaverse are for you at the moment.
So you mentioned that you think Bitcoin is the gateway drug, and I think that has proven to be true for a certain subset of the population. People that are kind of very technophile love Bitcoin. They can understand the software engineering component of it, but it's still very obtuse and abstract. I actually think NFTs have turned into what will likely be the gateway drug for crypto, because by sticking a picture on top of the blockchain and watching it move from wallet to wallet, we've actually made it easier to understand what the use cases for blockchain can actually be. And by sticking pictures of apes and punks and penguins on what was otherwise this very difficult to grasp concept of code moving through the cloud, we've brought an entire new group of people onto crypto, and they're starting to wake up to how big the possibilities are, not just for finance and decentralized finance, but for the world. We're seeing entire communities form around NFT projects that otherwise filled with people that never would have met in any other way, aside from the fact that they all own one of 10,000 JPEGs that all happen to have some features in common. It's really, truly transformative, and I do believe it's going to change many, many things about the world we live in today.
Okay, talk us through that, because for the devil's advocate on the other side, there's people saying, well, just a JPEG isn't enough. You've got NFT Bay, which is basically taking sort of terabytes of data and just right-clicking on each NFT and saving some of these, say, JPEGs, and they're trying to sort of say what perhaps, yes, it's a cultural revolution in some respects, but for them, they don't feel that they can understand fundamentally what people are buying when they're getting into NFTs. They say, it's nothing more than direction on how access or to download an image. What would you say to that?
I would say that they're actually missing the point entirely. The artistic merit of an NFT has almost nothing to do with whether it's valuable or not. And the value of an NFT is comprised of three distinct components. It's scarcity, the innovation and how innovative it is relative to other NFT projects and the strength and size of its community. And you'll notice I never mentioned how artistic it is and whether it's artistically important, because that's not really what it's about. The way I explain it to people who have a hard time understanding, it's kind of like owning a Ferrari. A Ferrari is a car. It can get you from point A to point B, but that's not what's cool about owning a Ferrari. It's kind of like the JPEG component of an NFT. When you own a Ferrari, you can show up to all these classic car events and meet with other people who understand Italian engineering and why it's so cool to own this very unique, rare automobile. And it's very much the same with NFTs. Individual NFT projects have attributes that the owners in that community value highly. And even if people outside that community can't understand it, as long as that community continues to grow, that NFT project will increase in value.
Okay, interesting. So because in a way, you know, you talk about its scarcity, but to the eye of the beholder, it's very hard to sort of show scarcity in some way, shape or form. I know in particular, you've sort of looked at scarcity of certain apes versus CryptoPunks versus fantasy islands and the like, but when inherently you can just see a visual on a screen, how do you think it's going to be? Do you have to be inside the club, understand the provenance to be able to sort of be excited by that rarity?
No, you just need to be able to count. I mean, if you look at OpenSea, it shows you the exact number of any particular project. So there are 10,000 CryptoPunks, there are 10,000 Bored Apes. Fantasy Islands, the project that Republic Realm developed, there are only 100 of them. There are only 100 fantasy islands in the metaverse, which is why when we sold them back in August for 5 ETH, which is the equivalent of about $15,000, they've traded upwards of $300,000 today, which, think about it. There are people paying more for islands in the metaverse than they pay for a real home in the real world in many cases, which speaks to scarcity, collectability, and the strength of the community that's supporting the price point there.
But the underlying technology, the usefulness, talk to us about some of the actual use cases being built underneath these, rather than just the scarcity and the excitement of being part of a community and a culture. What is the actual use case of these decentralized assets?
Well, for the ones that are built in-game, like Fantasy Islands, it's the idea of having a space that's yours. You can host a party there. You can invite your friends there. It's the same as owning, you know, a really big house in Malibu on the beach. It's social validation, it's social currency, and it's the ability to have something that other people cannot have. And that's why we're so bullish on the in-game NFTs that have real utility, because you'll be able to go there and own it and say, look, this is my house, this is my island, I own it, and you can come if I invite you, but otherwise it's only for me.
And just if you're a complete novice on this, what games should we be looking at? Is it all Axie Infinity that we should be looking at, or where is the excitement for you right now?
So, you know, people tend to think that there's one metaverse, and we track at Republic Realm over 180 different metaverses and more every single day. We have an analyst on our team who does nothing but track new metaverses, which range in stage from, you know, just a PowerPoint presentation to have already launched. The one that has been around for the longest, that people know the most, is Decentraland. We put Fantasy Islands into the sandbox. There are some others that we're also very excited about. Treeverse, Mirandus. There are a whole host of different metaverses. The ones that personally excite me the most are the ones that are thinking about ways to bring non-crypto native people into the fold, specifically women. I mean, women, as you know, we don't necessarily have that profound need to shoot each other and blow things up. So metaverses that are a little bit less dystopian and more social or more about shopping are particularly exciting to us. There's one called High Street that we really like. It's built entirely around the concept of shopping.
Not that all women love shopping, but I like your point, and I think it's well made. Well made. Janine Yorio, all about diversity in Web 3.0. Republic Realm co-founder, thank you so much for joining us. Meanwhile, coming up, it seems like every new company is now, well, a platform. What is a platform? Why is everyone suddenly claiming to be one? Our next guest, an author, Evercore Senior Advisor Jonathan Nee, will help answer just that. This is Bloomberg. Florida pension fund is suing Peloton for falsely assuring investors that its dramatic COVID-inspired sales surge would continue after the pandemic. Now, the fund wants to recover losses stemming from Peloton's stock slump in the last year. The suit claims shareholders lost $8.1 billion in one day, shares down 68%. in 2021. 69, basically. Meanwhile, some of the biggest tech companies, Apple, Amazon, Meta, Google, Netflix, even Peloton, they claim to be platforms. Platforms typically help facilitate some sort of a transaction, but lately it seems that just about every new company is a platform, and there's a very good reason for that. The platform business model is supposed to be, well, meaning big bucks from investors with a promise of big returns. But as my next guest argues, many of these big tech platforms essentially, quote, suck the value out of the companies that actually do things. Joining me now is Jonathan Nee, Senior Advisor to Evercore, but crucially is a professor at Columbia Business School and author of this new book, The Platform Delusion, Who Wins and Who Loses in the Age of Tech Titans. Who is a platform? Who's legitimately a platform from your perspective?
The issue isn't, excuse me, the issue isn't whether or not a company is a platform or not. All of those companies you mentioned actually are platforms. All a platform means is a business that doesn't make something. It creates value by connecting folks in a network. They could do that through a transaction. They could do that through a social network. They could do that by creating a place for people to innovate. That's all platform means. The notion, though, that it's a new and magical business model, that's just silly. A mall is a platform. Right? It's connecting people who live nearby with retailers. There are plenty of platforms that have been around for decades, even plenty of electronic platforms like credit cards. That's a platform that was created in the 50s with Diners Club. So the idea that just calling something a platform means it's necessarily a great business, that is the fallacy.
That's the fallacy, that's the fantasy. But who therefore loses in a company branding itself, dubbing itself a platform when perhaps its business model isn't all that?
Well, investors lose if that were the aspect of the business model that determined what its economics were, then it would be relevant. But when a company, say, like Compass, which is a perfectly good company.
The real estate Compass?
Real estate. Yeah. It's a real estate brokerage. Any kind of real estate brokerage is a platform. It's people who are trying to connect folks looking to buy something with folks looking to sell something. It's a platform. That doesn't determine what the basic economics of the business is. It's still a brokerage.
But a digital version, and therefore perhaps more profitable.
Well, no. If it's a digital version, actually, often the opposite is true. What is the difference between a digital mall and an analog mall? Well, the difference is that the operator of the platform in an analog world probably has a lot more leverage with the people in the network. Because the trouble is, in digital networks, very often there are low fixed costs and no switching costs. That means lots of competition. And that's why often the digital versions of platforms that used to operate suddenly become less profitable and less attractive rather than more profitable and more attractive.
Who are you writing this book for? Because I understand that investors might, lose some money here, but equally investors should be doing their due diligence to peel back the onion to understand that the fact that they put platform in their name perhaps doesn't mean dollars come falling from the sky. But are you saving the less educated investor or the younger investor or the newer investor? Who are you writing this for?
So investors are certainly an important audience here, but I would say part of this as well is my role as a business school professor. The percentage of students at a business school who are going to early stage companies, which just statistically, overwhelmingly, are actually going to fail, has skyrocketed. In the old days, it used to be they went to consulting and investment banking. Now, the majority of MBAs go to either startups or companies that have less than 50 employees. And the trouble is, they go on the belief that somehow these businesses are preordained to succeed. And the reality is, these businesses are often harder to make work, not easier.
Professor, are you sort of going to have to keep on updating this book to include then the companies that deem themselves decentralized, or companies that deem themselves AI-driven or something? Because there's a lot of kind of words that I feel companies just put in their business model because we're all Googling it and we're all excited by it.
Well, I don't have to update it because I got a chapter on that, right? So the phrase platform delusion does refer to a very specific lie. The lie that says platforms are new, digital platforms are better, all of them have network effects, and they're all winner take all. And that's just not true. But it also refers to more general phenomena where promoters use various trigger words, whether big data or AI or network effects or disruption, in lieu of talking about the fundamentals of what really underlies superior franchises, which at the end of the day is all about competitive advantage. And there is not a strong correlation between being a platform and having strong competitive advantage.
Jonathan Nee, fascinated to have some time with the author of the new book, The Platform Delusion, and senior advisor at Evercore, and of course, most importantly, at the business school, Columbia Business School. Meanwhile, coming up, South Korea's soft power, how Squid Game and Parasite's popular appeal can contribute to South Korea's economy at large. That's next. And as we head to break, Ford and Rivian scrapping their plans to jointly develop an EV. Rivian says that the car maker have mutually decided to focus on their own projects and deliveries, while Ford CEO Jim Farley says he's confident in his company's ability to win the electric space. This is Bloomberg. Disney is adding Disney Plus and ESPN Plus to its Hulu Plus live TV product. It's also raising the price by $5 a month. And the move gives the flagship Disney Plus streaming service millions more customers at a time when growth is slowing. Last week, the company reported the fewest Disney Plus subscriber additions since the product's launch 2 years ago. Now let's talk about some of that content, because Squid Games and Parasite to boy bands BTS, South Korea is becoming an international cultural phenomenon. Bloomberg's Quick Takes Alex Webb explains how South Korea and the US are vying for your hearts and your wallets through pop culture.
South Korea is having a moment. Between the Netflix show Squid Game, the chart-topping boy band BTS, and the Oscar-winning film Parasite, its culture suddenly seems to be everywhere. I'm Alex Webb, and this is The Attention Economy, where I try to get under the skin of the ways the business world is fighting for your attention. Squid Game is a massive hit for Netflix. It got 111 million views in its first month alone, its biggest series launch to date. It's also an example of what is known as Hallyu. That's the Korean cultural wave that seems to be enveloping the world at the moment. There's Parasite, the picture that won Best Movie at the Oscars last year. There's BTS, the massively popular boy band. And whenever people talk about Hallyu, they often, quite close behind, talk about Korean soft power. Now, soft power is different from hard power. Hard power is where you literally force a country to do what you want by perhaps invading them. Soft power is more subtle. It's a way of demonstrating the benefits of your society, of your cultural values and your political values. Back in 1990, when the Harvard academic Joseph Nye coined the term soft power, he wrote that if a nation's culture and ideology are attractive, others will more willingly follow. It's about showing that your system of government, your social and democratic values are appealing, and therefore hoping that that co-opts others into supporting the goals that you have. So, for example, the US, you've got Levi Jeans, you've got Coca-Cola, McDonald's, you've got Hollywood, you've got the Billboard Hot 100. All those are things which might make people go, US looks pretty good, I want to be like that. Problem is, when you think about Squid Game or Parasite, they're really bleak depictions of society. In Squid Game, the aim is to win a prize pot of close to $40 million, and if you don't win it, you die and your organs are harvested for use in transplants. In terms of the society it depicts, Squid Game's pretty similar to Parasite, the film that won the Best Picture at the Oscars last year. It shows a family on the poor side of town which really wants to get a piece of the life of a wealthy family on the other side of town, and they're pretty much willing to do anything and clear anything out of the way that gets in their path. It doesn't exactly depict a society that you might want to emulate. Of course, Korea has a lot of other mega hits. Its dramas and rom-coms are massive all the way across Asia. In fact, its content industry is now one of its 10 biggest exports by monetary value. And that may sort of be the point. US exports help sell US values. For Korea, the exports themselves may be enough. fact, the Korean system of democracy is sort of modelled on the US one. It's not trying to export that, but if it can help it sell, say, Samsung electronics or Hyundai cars, that might be a real benefit. No, you don't want to emulate Korean cultural and socio-economic values, but you might want to buy some of their goods. In that sense, the cultural value might lie in the economic value.
Bloomberg Quick takes Alex Webb there. Great piece. That does it now for this edition of Bloomberg Technology. Stay with Bloomberg because my colleague David Weston is next with Wall Street Week. Got plenty of guests to be discussing, of course, as ever, former US Treasury Secretary Larry Summers. Some interesting takes as we all await the announcement from the Federal Reserve, or indeed the announcement from the administration about who will lead the Federal Reserve, expected to come in time for Thanksgiving. That's it from New York. I'm Caroline Hyde, and this is Bloomberg.